Well, greetings, my fellow Mississippians. Coming to you from my humble abode slash trailer here in Jackson. It's my home away from home during the legislative session. After creating this Substack channel during my U.S. Senate run last year, I had every intention of creating more regular content to send out to all of you, whether I won or lost the race. And it's not because I have any desire to spam you for the sake of sending emails. In fact, if you're like me, you probably got multiple email addresses and get an ungodly amount of spam. But consider this my first installment of a monthly email that I hope will spark conversations about topics that are relevant to both of us. As many of you may know, I still serve in the Mississippi House of Representatives, so for session months around the first of the year, I imagine those conversations will be centered around politics and what's going on in Mississippi and how it'll affect you. But through the rest of the year, I would like to create monthly discussion topics that center around more than just state politics, but discussions that surround topics such as family, freedom, religion, and just life in general. And in a world where we are already on information overload, I don't want to waste your time on issues that aren't relevant to any of us in the long run. I hope you'll consider remaining a part of this discussion going forward and that you'll feel free to comment, to which I will do my best to respond, and that you will share this space with other people that you think might benefit from it. I also want to hear from each one of you as to what you find important. This is meant to be a two-way conversation. Now, that being said, in dealing with the issue of relevance, in today's first conversational episode, I want to talk about the recent Mississippi tax cuts. I want to give you a little history of how we got to where we're at, how it will affect you personally, and dispel some of the narrative and rumors going around social media, and there are plenty, and invite you to share this conversation with others. And lastly, have you let me and others know how it affects you personally through the poll that I've embedded in this email. So, how did we get here? You probably read the discussions on Facebook posts or other social media talking about how horrible this plan is or how it's just merely a tax swap. And I know until you see how it affects you individually, that's all it will ever be seen as. When I got elected 10 years ago, at the top of my priority list were some key issues. I wanted to protect our religious and constitutional freedoms against any increasingly politicized and oppressive moves by the far left. I wanted to protect human life and end abortion in our state. I wanted to shrink the size of government, cut taxes, and improve the economic prospects of everyone who lives and works in our great state. And I feel very fortunate, very, very fortunate that God and my constituents have allowed me to be a part of doing all these priorities. If you'll remember back in 2016, I was a co-author of the Religious Freedom Against Persecution Act that went all the way to the U.S. Supreme Court and was upheld. In 2018, I was a part of eliminating the 3% tax bracket. In 2022, I was a co-author of the Tax Freedom Act that eliminated the 4% bracket and started phasing the 5% down to 4%. And now, with House Bill 1 passed this session and signed by the governor on March 27th of this year, we have set into motion the full phase-out of the Mississippi income tax. As of today, hardworking, tax-paying Mississippians are already saving around $350 a year in income tax from the previous tax cuts that have phased in. Now, figure out what you paid the state in 2024, and with this plan, that number will eventually phase to zero. Like they always say, though, the devil's in the details. So I want to break down what this looks like in real numbers. At the end of the day, most Mississippians are going to benefit. The real question is just by how much. That answer is pretty easy if you're currently paying anything to the state in the form of income tax. But there are two other components that come into play. A grocery tax cut paired with a gas tax increase. That's what we need to break down here in this video. But before I break it down, I want to give you a little history on House Bill 1. It has been and was the priority of the House of Representatives to eliminate the income tax for some time. We've been doing it incrementally. It has also been the priority of Governor Tate Reeves. Now, right out of the gate, the first piece of legislation that the House put forward, hence the House Bill 1, there was an attempt to do just that. Good or bad, it offered up over $1 billion in tax cuts. Personally, I wasn't real happy with the 5% sales tax increase on gas because as gas goes up in price and when folks can afford it the least, so does the tax. It also increased the general sales tax by 1.5%. While it was a net tax decrease overall, the working poor and retirees on fixed incomes would not really benefit, and in many cases actually paid a bit more in taxes. But it got the conversation started, which was what it was meant to do. This plan was immediately rejected by the Senate. They offered up another version, which did very little. When the House bill made its way to the Senate and the Senate bill made its way to the House, both chambers took revised language from their first iteration of the tax cuts and put their language into the opposite chamber's bill. I know, it sounds very confusing, it kind of is, but basically they took our shell and put their language in it, and we did the same to them. The House did it with a revised plan that was better than our first offering, and the Senate plan was better than their first offering. But ultimately, the big hang-up between both chambers, along with the governor, was that the House and the governor wanted full elimination of the income tax with no triggers. Now, triggers are basically just the language that says, if the state makes this much and only spends this much, then the next cut will go into effect. And as we all know, that is no guarantee of anything. Also, when have you ever known the government that doesn't just spend more money when it takes in more money? The Senate was dead set on structuring triggers before anything would happen. When the Senate ultimately sent their final version over to the House in House Bill 1, it included a typo that basically rendered the triggers to be anything but. Basically, instead of having to reach the 85% of the predetermined number, either the attorney or proofreader or the chairman or the clerk or maybe all of them involved, who knows, accidentally put a decimal point in front of the 85. That basically ensures that the triggers will always be met, having to only be within less than 1% of the target. The old saying that punctuation matters, well, in this case, it really did. And the House and governor realized the mistake, and they seized on it, passed it as is, and the governor signed it into law. So while you hear that the bill has triggers before any of the taxes will phase out, in a technical sense, it doesn't really, because they are infinitesimally low. Now, that being said, with effectively no triggers, the overall effect of the bill was much better than either the Senate or the House's previous version. It raised the gas tax by a lower amount than any of the other plans. It made the grocery tax cut instantly and this year, July of 2025, and actually fully phased out the income tax. And it does it all without raising the sales tax. Now, this is incredibly significant because of all the states that have no income tax, they've never had an income tax. We look at states like Texas and Florida and Tennessee, who are growing by leaps and bounds economically. Mass portions of our population in the country are moving to those states, and much of that comes from having no income tax. But here's what is so significant. They have never had an income tax before. They built their funding model around higher sales tax, higher gas tax, and higher property tax. And you know, two of those states, using them as an example, also have toll roads. So not only do you pay the gas tax, the higher gas tax, but you have to pay a toll. Mississippi will be the first state in the country who has relied on income tax as their funding model to actually phase it out. And here's the cool part. It will be done without raising the sales tax and property taxes. Now, I live in DeSoto County, which is basically a suburb of Memphis in Shelby County, Tennessee. Shelby County has a 9.75% sales tax, higher gas taxes, and property taxes that are about 3 times what I pay in DeSoto County. This is big. I have a lot of friends who are pilots for FedEx, and they're earning between $300,000 and $500,000 in income. They personally told me that they would live in Mississippi, especially DeSoto County, because the schools are better, the crime is lower, but that income tax, well, how do you compete with zero? This will be a boon for the state, I truly believe, when fully phased out. Why wouldn't you move to a state that has lower property taxes, lower sales taxes, and no income tax? And when these people with means come to our state, they buy houses and they pay taxes. They buy groceries and clothes and gas and cars and have those cars serviced in the state. They hire local contractors to come and work for them and every other service that they need, which in turn creates more industry, more jobs, and more residents. And more revenue, believe it or not, for the state by growing the economy and incentivizing those with means to move here. You ever wonder why most everyone who makes it famous and rich don't come back to Mississippi? Well, that's a big reason why. So let's talk about the plan. First, it bears out mentioning that when fully phased in, we are talking well over $1 billion in tax cuts. And some folks online have been arguing that all this plan is a tax swap. That is not the case. Or that we should have just cut government drastically and then cut taxes. Now, it's easy to have all the answers and play armchair quarterback when you don't have a complete view of the landscape or the needs of our state. Is there waste in state government? Yes. Are there services and things that our taxes are being paid towards that are not core functions of government? The answer is yes. But in the end, the state is really not much different than our personal families. As long as the money is coming in, there's no incentive or desire to trim the fat. And when you lose a job or take a pay cut, it forces you to assess what is non-essential. So you cut out those trips to Starbucks. You cancel your Netflix subscription. You do a better job of turning off lights when they're not being used. In the end, the same will happen to our state. Revenues will continue to grow based on projections, but they also will be getting cut as income tax phases out. And if the state can't cover its spending, it'll be forced to trim a lot of that waste and fat. You basically starve the system. So the byproduct of these cuts, I think, unless we experience excessive growth due to them, will result in weeding out some of the waste. Now, as you know, we currently are in a phase down of the 5% to 4% bracket. This was part of our 2022 Tax Freedom Act. It will be fully phased out by 2026, and at that point, House Bill 1 from this year will phase it down another 1%. Over the course of 4 years, it will phase it out at 0.25% per year. We will see and then be at the 3% max bracket by 2030. And then going forward for the next 10 years, we will phase it out at 0.33% per year. Now, I know it doesn't sound like a lot, 0.33%, but if you had, let's say, $25,000 worth of taxable income, that increases your tax savings by about $83 more every year going forward. So $83 this year, $166 the next year, and so on. Now, let's talk about those of you that don't pay any tax or who are retired and on a fixed income like Social Security and don't pay any income tax. Basically, my parents. You're probably saying, this doesn't benefit me at all. Well, it's true. It will not benefit you at the same level as somebody who's currently paying income tax every year. But there will be a mild benefit to you as well. And that will come from your grocery tax cut. Starting July 1st of this year, 2025, grocery taxes will drop 2%, from 7% to 5%. I personally would have loved to see the grocery tax go to zero, especially since it is a basic necessity. But the reality is you have to get 3/5 of the chamber to vote for it in order to pass any kind of reform. There was much fear and loathing by many in the legislature, as there always is, that this would destroy our state and bring about the apocalypse. It really was no different than when we did our last 2 tax cuts. We did it incrementally in order to be fiscally responsible, and we see how that played out. People saved money and state revenue went up. It's important to point out that the lion's share of revenue which local municipalities, cities, and towns that you live in operate is on sales tax diversion of items sold within the borders of their towns. What do I mean by that? Well, Mississippi has a 7% sales tax. The municipality gets an 18.5% diversion of that returned back to them. Now, the majority of towns across Mississippi, especially rural ones, their grocery stores are their primary source of diversion revenue. If you were to kill that diversion by fully eliminating the grocery tax, cities and towns across the state would have to raise their property taxes. As I mentioned before, Mississippi did not build its tax structure around sales and property taxes, which is why both of those are much higher in other states without an income tax. And I should point out, even in most other states that have an income tax. At the end of the day, 2% is better than nothing, and it sure beats a raise in property taxes. The state will eat the loss, and they increase the diversion on groceries to the municipalities, so they'd be made whole. So what does 2% look like? Well, that depends on how many groceries you buy per month. The more you buy, the greater your ultimate savings. Groceries tend to be the largest ticket item that all households have, apart from their mortgage. To give you an idea, if you spend $500 a month on groceries, which is typical for a family of 2 or 3, that saves you about $10 a month in taxes, or $120 per year. And this is where most people's antennas go up. In this bill, there was an increase in the excise tax on gas. Now, an excise tax is a set amount per gallon. Currently, you and I pay 36 cents per gallon on a gallon of gas in Mississippi. 18 cents for the state, 18 cents for the federal. An excise tax is not the same as a sales tax, though. For example, a 3-cent increase per gallon of gas as an excise tax remains 3 cents, whether the gas is selling for $1 or $5 a gallon. A 3% sales tax on gas would mean that you would pay 3 cents if gas is selling for $1, but an additional 15 cents if it goes to $5. Now, all of the other tax plans that have been looked at and proposed this session all had higher excise taxes and or sales taxes. This version of the tax cut that we passed has the lowest increase in gas tax. So starting alongside the 2% cut in grocery taxes is a 3-cent increase in the per gallon cost of gas. You will experience the full 2% grocery tax cut in July of 2025. And over the course of the next 3 years, the gas tax or excise tax will increase 3 cents per gallon until it reaches a total of 9 cents, not 9%. It's worth pointing out that right now Mississippi has the lowest gas tax of any of our surrounding states, and we have not raised the gas tax since the 80s. This is where much of the blowback about this being a tax swap has come from on social media. So let's dig into what this really looks like. If you spend $500 a month on groceries, you will have to buy over 111 gallons of gas per month before you pay any increase in taxes after full phase-in. If you're a senior citizen on fixed income, chances are you don't drive as much as someone who has to go to work every day, and thus the probability is high that you will buy less gas. But we will all still buy the same amount of groceries whether we're working or not. The second complaint is the future increases built into the gas tax. Now, once the gas tax is phased in fully to 9 cents per gallon, and based on national figures and average inflation numbers, there is a mechanism for a maximum of 1 cent per gallon increase every 2 years. If inflation warrants it or doesn't warrant it, then no increase. Even if inflation goes up 20% some year, the maximum allowed increase is still capped at not more than half a cent per year, basically. Chances are the road maintenance and installation costs will not be the same today as they are 14 years from now, and they certainly aren't the same as they were in the 1980s. Currently, the legislature approves and appropriates money for the Mississippi Department of Transportation. It has not kept up with inflation, and it changes from year to year. This gas tax increase will be dedicated funding for our roads and bridges, meaning it will not go into our general fund to be appropriated at the whim of the legislature. One of the benefits of this model is it will unlock more federal funding, and in the end, which only benefits our roads and maintenance and capacity projects. So here is what I need each of you to do. First, I'm tickled to death that you made it to the end of this video. I know it's been kind of long and boring, but I would like for you to go in and enter these numbers into the formula that I've built so you can see exactly how the tax cuts will affect you personally. Keep in mind that the outcome does not include the $350 in tax cuts that all are working Mississippians have already received through the phase-in these last 8 years. You can go straight to the Google document and enter those numbers, but it is a shared document, meaning that if multiple people are on it at the same time attempting to utilize it, it's getting updated in real time by whoever's using it. You can certainly go that route, but I would encourage you to download the Excel file to your computer. Enter the 3 numbers in the box and let it calculate out your tax savings every year until full elimination in 2040. You'll need to calculate what you spend on groceries per month, or at least have an approximation, how many gallons of gas you buy on average per month, and what your taxable income last year was, or for 2024. If you look on line 16 of your Mississippi income tax return, that's the number you want to plug in. Once you have put in those 3 numbers, you will get a real idea of how this will affect you. And built into my form's calculations is the assumption that gas tax will go up 1 cent every 2 years after phase-in. That may not happen, but I wanted worst case scenario so we could have a real picture. And if it doesn't go up, hey, that's just more money for you and me to save, right? Please see how it affects your family and respond in the poll so we can all see. And that this just wouldn't be a knee-jerk reaction or a narrative, but how many folks it actually benefits. Feel free to leave comments and to share this Substack with your friends and family so they too can see how it impacts them. Well, I hope this sheds some light on things and gives you a real-world personal look at how these changes will affect you and your family. We'll see you next month when I plan to do a legislative session highlights update for everyone in our state. But till then, God bless. And thanks for being a part of this discussion.